What if I said you could pay any price for any property? Now, negotiation is not just about price. Price is just one of the levers you can pull. There are many other levers that you can pull to actually negotiate a deal. So, too many people focus on the price, and not enough people actually focus on the levers that they have available to them to actually make a deal work. Now, what I mean by this is, if you think about it, everybody knows that if you come with a cash offer, that you can negotiate a lot harder on price than if you're coming being in a long chain with a mortgage that you've got to get and apply for. Those two situations aren't the same. Whoever you are selling, whether you're just selling your own home or an investor trying to sell an investment, someone with cash is going to be far more attractive. And sometimes you can add some value to that, to the buyer, rather than the seller, so that you can get a lower price. So we often hear quick cash sale, or I'm a buyer with cash. So because you're expecting a lower price, and the seller often expects to give you that price. But there are many other levers that you can pay than just having cash, because a lot of investors don't have cash, but we can still pull these other levers. Now, one of them is certainty. So you can give the seller certainty, because after all, cash is often associated with certainty. But there are other ways that you can give certainty, like moving to exchange really quickly, because that's then certain, isn't it? An exchange is a certainty mechanism. So an exchange delayed completion actually gives people certainty. And this is why when people are looking at creative deals, they go, well, I'll do a lease option. The seller didn't want the lease option. That's because there's no certainty. And if their reason for sale is certainty, they're at the end of their tether, the property's been on the market for a while, maybe they've had a few sales fall over, they don't believe you're going to do it. So they're not interested or entertaining your offer. They want certainty. Because again, if they have to wait a year for you to exercise the option and there's no certainty behind that, that's completely the opposite to what they actually want. So understand that certainty can be offered in more ways than just cash. And again, speed can be offered in more ways than cash. And it could be speed to certainty. Yeah, it could be, I want it just quick. I want this pain to go away now, but identify what the pain is. And there could be loads of ways of solving that pain. One of it might be the actual sale to complete, but one of it might be the exchange. So now you know and have that certainty to do it. The other lever might be, I want a certain price. Whatever happens, I want a certain price. And some vendors will wait and wait and wait until they get a price. So therefore, if you can match their price by actually utilizing a different mechanism, like an exchange delayed completion, then you are going to be more successful at actually maybe winning that deal, because they're just waiting for a price. Quite often, I find that £1 million, a block of flats and stuff like that, £1 million is the key that they want. They want to tell their mates down the pub, don't they? I sold this for £1 million. They want to feel good about themselves. They want to feel as though they've made it. So I had a vendor like that who wanted this £1 million price, but the property wasn't worth it. So he wasn't really going to get it. So what I did is I said, look, I'll exchange and then I'll complete. I can do some adding value. And I knew that by adding value that actually it'd be worth more than £1 million. So therefore, in reality, by the time I came to complete, I would be getting a discount. So if I could make that property that, say, today was only worth 900k, be worth 1.2 million, and then complete on that open market value of 1.2 million, and the guy wanted £1 million, that was worth it. Now, if I had to buy this on a bridge, that might have cost me a lot of money, maybe even 100k in finance costs. So therefore, eradicating these expensive finance costs would actually therefore allow me to pay him more. And if I don't have to pay him more until I complete on it when it's worth more, then therefore I could pay him that and not have to come up with the full deposit, which again is going to hurt me. So if I was buying at 900k, I probably couldn't buy at 900k because that's the value. I'd probably have to buy at 800k or 700k. So he's getting a lot less because I would then have to pay for bridging. I'd have to come up with the funding and the deposit, whereas this mechanism allows me not to have to put all the money in. And again, if I, in this case, collected the rent and gave it to him, paying off some of that £1 million to bring it down to about 900k, it meant when I completed, I got a 900k mortgage on it. These are simple, I'm using rounding figures here from the actuals of an example is that I've done just to explain it clearly. 900k. I mean, when I got the mortgage, I didn't have anything else to pay, which got rid of the deposit. It got rid of all of the problems that was going to cause me, but he was happy to wait. But also he had a pain. He had a pain that he wanted to reduce hassle. He didn't want to have to manage it anymore. He wanted to retire overseas. He wanted to head over there, but he didn't need all the money at once to do so. He just needed some money along the way. And therefore, if I took over the building and collected the rent and paid him the rent as we went through, and that rent came off the deposit, it reduced the hassle. So these are all the levers that I was using in this negotiation that created a win for him and a win for me. And therefore, there was a win-win overall. So what you've always got to do is uncover the seller's real problem. Quite often they're going, oh, but I just want this figure. I need this. But if you really dig deep, you'll find out what it is. And he wanted certainty and he wanted to reduce the hassle. He just didn't want to manage it anymore. And I knew that I could help him with that and actually get the mechanism I want. So while negotiating, you need to understand the psychology of the person, what's going on and how people operate. So there are some things that will really help you out with the negotiation, in my view, is that quite often people fear losses more than they like gains. So if you put the fear of God that they are potentially going to be left stuck with this building that they don't want and things could go wrong. So if I said to this guy, look, you could be here for another year, and imagine if the roof goes on your property and then you've got to manage and do that. And, if you're not in the best of health, that's going to be quite awkward for you and something you don't want the hassle of. So why don't I alleviate that by doing this? So they often don't like it's the fear. They're running away from motivation is often in negotiations stronger than their pull of the beach. Imagine yourself on the beach. Use a bit of both and see what happens. But I would say that's what you want to do, is you want to be rubbing it in and making that fear seem real and close to allow you to actually create some of these structures. When you're negotiating as well and you're trying to negotiate on price or a term, just go silent after you've made the offer. So I'm happy to pay you £1 million, but I need some time. Are you okay if you give me some time? Once you've gone silent, they fill the gap. No, I don't like. Well, how much time are you thinking of? Okay. How much time are you happy to give me? Allow them to fill that void and give away what they're thinking. Oh, well, I'm okay with 2 years. Now, if you'd filled that gap and said, 12 months, they might actually give you more time than you were looking at. So fill the gap and then you can negotiate from there. The other thing is to make sure that you're listening to what they're saying, utilize their language, so mirror their language back to them. So when they say, I want certainty, say, well, I can give you certainty. If they say, I want a sure deal, say, I can give you a sure deal. So use the language they're using because they understand that language, not necessarily the language that you're using, because exchange delayed completion isn't language everyone always understands. So why don't you say, I can exchange now and give you certainty. So use the word certainty if they're looking for certainty. And then I can take some time to complete. Maybe in a year's time, I'll complete, or I will complete in a year's time. So utilize that. Sometimes you have to dig deep and get the real thing that's going to transform their lives. I call it the black swan effect of uncover that black swan, and you really could construct a really good deal. So some of the things that I feel I need to know when entering into a negotiation is obviously, and you're evaluating a deal, is obviously the motivation for the sale. So whenever I do a viewing, I'm always asking for the motivation of the sale. So I'll go to the estate agent, because normally it's the estate agent on the first viewing that you just have them. What you want to try and do is get the vendor along maybe for a second viewing and say, look, I want to discuss a few things with the vendor. Can you get them along? Or can you put me in touch with them? Try and get direct to the vendor to start these negotiations. And there are various ways of doing that, which I won't go into in this video. But really try to get to grips with what the motivation of the sale. What does the seller actually want? Is it the price? Is it the no hassle? Do they have a minimum price? Do they have something that they're after? What are they doing with the money that they're utilizing? Maybe if retirement is always a good thing, and I find a lot of these deals are retiring landlords who don't necessarily need the cash now, but they just want to exit for less lack of hassle. So we can do that. So you need to know, what is the current value of the building? So what is the asking price, but what is the current value? Is that more or less? What can you increase the value of the building to? Can you increase the value? Can you do some refurbs? Can you increase the yield to, therefore, if it's going to be commercially valued, increase the value of the building? what is the rent? So what is today's rent? Is that above or below market rent? Can I put up the rents, increase the rents, and therefore increase the value of the building maybe sometimes, get more money so that I could guarantee them their rent, but put up the rent, and then I take a margin and I'm collecting some money while we're collecting the rent and in control of the building. So you need to understand all these things, and it's like then a kind of a Tetris exercise of putting all of these different shaped things together to neatly stack in and create that deal. And that's how I see it in my head, is utilizing all these factors and making them all fit together so that we create this win-win between you and the vendor. So what are my tips around actually then going into it? Utilize people's greed about the price that they want, because I find that people are greedy. So if you give them what you want, then they're going to get greedy and they're going to wait for that greed. They're going to get excited. They're going to see the certainty of an exchange. So do that. So give them the money they want, but take the time off them. And if you can make it all work with that, you're going to get a lot more deals and negotiate on the price than giving them their greedy price, what I call their greedy price of, say, $1 million when it's only worth 900K. But there is some latent value, because if I put up the prices of this building that's yield based, I know that then it's going to go more than $1 million. So actually, is it worth $1 million today anyway? So anyway, very much trade time for value and price. And if you can collect, say, a year's rent, 2 years rent, but actually stack that onto the price and therefore inflate the price to give them the price that their overinflated price, and then you don't have to give them a deposit, that works for you. So allow them to be that greedy. Negotiate when you're doing a portfolio deal, negotiate at the top level of the price. They might have a top level price, and then ask to be allowed to allocate the individual prices to allow you to push the same deposit through again and again and again. And I've helped people do that by multiple portfolio deals through utilizing that. I've done it myself. I negotiated at a top level. I asked them to allocate individually, and I bought an 11 property portfolio early on in my investing career. So you need to also look at it from their perspective. Whenever you propose something, make sure that there is something's not going to ring alarm bells in them. You know, the sensory protection, that they're going to be looking for danger in this creative deal, because that's what your brain makes you do. So I've seen people come in and I've told them, you know, let's negotiate this, put this one lower than this one higher, and then they go too extreme on the low property, and the buyer is going, no, I can't do that, and the whole deal gets thrown out. So you need to be careful when you're allocating prices. You don't want to go too extreme to ring alarm bells, or if you are, approach it with, would you be okay if I did this? Not like, I need to do this. Approach it softly. So make sure that you come from their perspective and maybe work with them to get there. And if you can get them to say the words themselves, what's the lowest you could go on any price that I'm allocating, and let them say it, then they own it. And one of my best mentees utilizes this strategy a lot. Let them provide with the solution. So when there's a problem, say, well, what do you want? How do you want to solve this? Well, if you could do this for me, and if you can do it, just say, yeah, I can do it. We don't have to change it too much. Allow them to get their way. So that's always a really good thing. So with the negotiation, I would say lower your tone, speak slowly, speak calmly, use simple language that's easy to understand. Always use a lower grade of language, just because complex things you need to make simple, because they've never heard all of this stuff before. So avoid the jargon. We in investor circles, who are educating ourselves and in groups and hear all this terminology, kind of can get used to it. But an old investor who's never been to an education training or anything like that isn't going to necessarily understand all of the jargon that you use in today's world. So don't use it. Use plain, simple language and explain it simply, rather than putting through the technical things. So I don't really talk a lot about exchange delayed completion with my vendors. I say, well, give me some time. I'll exchange quickly, and then I need some time before I complete. And I will look after the building in the meantime. I will take control of the building and collect the rent and pass on the rent to you. I don't necessarily talk about the word lease, because potentially I'm going to take a lease between the exchange and completion. So let's have a look at two mechanisms that a lot of people use: exchange delayed completion and lease option. And a lot of people love to say, let's use lease options, and don't talk about exchange delayed completion so much. But for me, I find that the landlords and the sellers all are much more geared towards EDC, exchange delayed completion, than a lease option, because of the certainty element. and the speed that you can get there versus the uncertainty element of a lease option. And it's so stacked in the buyer's favour. So yes, it'd be great to negotiate all of these, but I find there's less options for that than there is for exchange delayed completion. So if you're prepared to do it and do it as risk-free to you as you can, so make sure you negotiate the right points and put that in there, you can do that. And one of the benefits of either one is that potentially you can use the rental payments towards your deposit, because you can lock down the price, collect the money and say that's going to come off. I'm going to pay you in segments and pay the money down with the deposit. So that with the rent to make the deposit. So that's really good. So when you're trying to find out all of this information, to find out what they are, just ask questions. Always trade something. So never just give away something in a negotiation. Always trade something else for this. Well, if you want more money, if you want another £10,000, I want an extra 3 months. If you want an extra £20,000, I need an extra 6 months. Equate what it's worth to you and why it's worth there and what you can do. So the other thing is, don't compromise, because if you compromise on what you need, you might be unhappy, and vice versa. If you force him into something, the seller or she into something, then you're going to get to a situation where potentially there's going to be seller remorse. So create that win-win scenario that we're both then championing towards what we're trying to achieve, instead of making halfway solutions that are half cooked and half baked. So don't forget, to win at your negotiations, you also need to set them up, frame the context, and that can shape the whole deal. So talk about time first. So if you're trying to, like, again, be in the right place for the right location, if we're trying to do it all through email, that's going to be less effective. So why not get a coffee? We often call it the cup of tea method. Get in front of them, have a cup of tea with the person, start chatting, and then start to negotiate some terms and say, this is what you're going to do, and we need to come to a conclusion. But also put the frame in the place where it's like, look, this isn't the only deal I'm looking at. Yeah, I've got lots of deals I could do, because right now it's a buyer's market, not a seller's market, because yields are low and interest rates aren't that low as to where they were. And therefore, the yields and the attractiveness of your building with the Renters' Rights Reform Bill coming in isn't as attractive. So I've got lots of opportunities here. So I would like to work something out that works for me and hopefully works for you, and then we can have a win-win solution. But the only way I can do that is potentially if you give me time, and then I can give you more money. Are you up for more money than if I had to buy it now? Oh, yes, maybe I am. You see how we framed that? You see how we've done that negotiation and just framed it and got him to say yes, to give us permission to now pitch a deal that potentially is an exchange delayed completion. So if you have open discussions about your needs and their needs, then you are more likely to come to a conclusion. After all, a bad deal is only the deal that is going to happen when you step outside the parameters that work for you, and vice versa, step out the parameters for the seller. It's a bad deal for them. So remember, most deals that work get over the line, especially with the creativity, because they're going to have people telling them that you shouldn't be doing this, you can't do this, and all of that. So they've got to push through all of that, is where you step outside the parameters. So do remind them that you always can walk away. You have the power to walk away from these deals, because you've got other deals and options to you, because that is very positive. And quite often, even if you allow them to go off then, because they think they're going to get a better deal elsewhere, the deal comes back to you. And when the deal comes back to you, guess what? The tail is between their legs a bit, and therefore they're going to struggle. You are now in the power seat. You can negotiate a much better deal. Oh, well, that deal was on the table. Now it's this, because guess what? I've spent my money over here, or the market's not so strong, or, obviously you've been struggling to sell it. It's not worth what you think it's worth. And that's where the power comes back to you. So walking away can be one of the most hardest things to do, but one of the most effective things to do. So know where your line is and walk away from that. And if you have lots of options and you walk away from deals, things are going to come back to you. Believe me, this has happened time and time again for me and my mentees. So some of the things to think about when negotiating the deal is obviously the exchange deposit amount. So if we're looking at exchange delayed completion, some of the things you have to negotiate and think about: how much are you going to give on deposit? Is it a very small amount? Sometimes it's £1, sometimes it's 10%. Like, that's the typical deposit. But we go for as little as possible, but you also need to give them what they want in terms of certainty, because some people might go, £1, that's no certainty. You can walk away from that. I know I can sue you, but it's not enough. What is the purchase price? Yeah, the actual purchase price that you're purchasing at. Okay, the right to assign the property as an onward purchase. The actual purchase price, the timescale, the completion date is another factor. What happens in the interim between exchange and completion? Do you have access to do works? Are you collecting the rent? Do you have the power? Do you have a lease in place? What is all the things that you need to do? So look at the rights that you have, the seller has, and agree those rights so that you can get what you want and they're happy with that. Maybe they don't really want to be managing it anymore. Therefore, you taking it over can be a great thing for them. Sometimes it's like, no, there's no way you're touching my building until you own it 100%. So you have to work with them. What kind of penalties and extensions are there? So if you don't complete, say, after 12 months, because there's a delay in your refurb, what happens? Do you lose the building? If you can put a penalty clause, if you delay, therefore you can get an extension potentially. Could I just extend it for no cost? Could I extend it for penalty fees? Can I extend it for a cost? Just make all of that clear up front. So therefore, and again, these are the kind of things you could potentially ask the vendor to come up with a solution. Well, what happens if I'm not quite ready? I haven't quite done the refurb by 12 months. What do you want to happen then? And then they're comfortable with and give you more time, because they might be really, really insistent on the 12 months. And actually you really wanted 2 years. But this is a way of sneakily getting 2 years by saying, well, okay, what happens after 12 months if I'm not quite ready? I'm sure you still want to sell a building. What would you be happy to extend, say, for another year? And then they might come up with it. And then if that's palatable to you, agree to it or amend it slightly to make it more palatable to you. And then you've got what you've wanted. So make sure you've done that. And just make sure that everything that you do is agreed. And what I often do is then write out a heads of terms with all these parameters, give it to the solicitor, and off we go. We're ready to do the deal and push it forward to legals. So hopefully that's described to you how you can actually do deals. Don't forget to like and subscribe to my YouTube channel, because I'll be doing far more educational videos throughout 2026. And I have, if you really want to learn more about exchange delayed completion, I've got an event coming up very shortly. Link will be in the bio, and book yourself onto an event where you can learn this process, and you can then walk away, start doing these exchange delayed completions, and where you'll get far more deals and you'll win far more negotiations, because you're aiming for that win-win scenario rather than having to screw down the vendor into the lowest price to make the deal work for you. So in summary, frame the meeting up initially, get the communication simple. Don't obsess over the price. Use these other levers that are open to you, and understand what therefore is important to the vendor so you can frame that and give them what they need. Be confident, assured, and respectful, and always convey the abundance of deals that are open to you. And now that you know these techniques, far more deals will be open to you, so you won't be lying anyway. So good luck with this negotiation. I'm sure you're going to create some really fantastic win-win scenarios where you're going to be happy, the vendor's going to be happy, and therefore your portfolio building will skyrocket and basically 10x very quickly by utilizing these methodologies. So don't forget to subscribe and check out my other YouTubes to get more detail about some of the examples that I have done for myself and my mentees have done as well.